We're really excited to welcome you to the first in a quarterly series we intend to have around investing in sustainability and equity. First, we're going to hear from some leading voices, including Bob Eccles, chairman of KKR Sustainability Expert Advisory Council, and a leading thinker on ESG integration reporting. He'll be interviewed by Allison Fenton-Willock, a key member of KKR's ESG team, and they'll touch on a number of topics, reflecting on what we've learned and what our mission is together.
Let's talk about the future, right, of ESG. What issues in your mind have historically not really been in the spotlight, but are expected to rise in prominence? What's rising to the top of conversations these days that investors and the GP community should keep on their radar?
The big thing that I see happening is this issue of income inequality. The question is, the portfolio companies where a lot of value is being created, is it being appropriately distributed across everybody, not just the LP and the GP and the executives and the board, but all of the people in the company?
Then we'll say, what does it mean when it comes to investing? And we're going to hear from a number of KKR's business leaders describing across investment classes from private equity to infrastructure, real estate, and credit, how each of our businesses and Impact think about these challenges and build it into how they operate.
The first is one that we've been talking about here today, which is scaling up our team and capabilities to really partner with these leaders here to make sure that we're implementing best-in-class approaches in each of the strategies. The second priority that I'll mention is one of these ambitions, which is climate. But we're really thinking about things from net zero. What is KKR's role here? How can we really contribute? And third and finally, ESG data. Every single day we're thinking about how do we collect, analyze, and report huge amounts of data in a way that also drives meaningful insight.
We recently enhanced it with a proprietary scorecard that we've developed over the years. This data has been collected over a year time period, and we're analyzing it now and seeing a lot of interesting data that's coming out that is helpful across all our entire portfolios from a risk management standpoint, and as well as we're seeing a lot of opportunities that are coming out from the data we're seeing.
Infrastructure is really at the center of the capital formation required to enable energy transition. That's directly in renewables. We've invested behind 14 gigawatts of renewables globally. It's also an energy transition. So, for example, the natural gas value chain, sending natural gas to Asia, where it lowers the growth or it takes offline coal plants or oil field plants, and energy efficiency. District-wide, city-wide heating and cooling as opposed to building by building, which is much more efficient. We've invested behind these themes, and I think there's more to come as you think about the technologies, the investment, the resources, the people required to achieve energy transition.
We are working very hard to develop what we believe is a truly market-leading approach to embedding ESG criteria into all our investment processes. So in due diligence, we review investment opportunities against 9 ESG dimensions. Second, for those 9 ESG dimensions, we have set clear objectives that translate into more than 50 ESG KPIs. Finally, to make sure all this works, we have disciplined processes in place, making sure that everybody in the deal team feels personally accountable for ESG.
The real estate community is evolving very quickly to really emphasize and focus on a need for sustainable commercial real estate footprints. You're seeing a bifurcation real time between the value of assets that are sustainable, like green premiums, relative to assets that are antiquated, that are sort of considered to be brown discounts. Real time here in New York, by 2024, Local Law 97 is going to come into effect, which is going to require commercial real estate landlords to have a cap on their emissions of carbon. So you're seeing it from all points of view, the real estate equity capital markets, the credit capital markets, as well as from the tenant community and, of course, the local municipalities.